Hello students, welcome to second PUC accountancy class. In previous class I taught you how to analyze financial statement by using comparative statement, and in today's class I will teach you how to analyze financial statement by using common size statement. So first let us know what is common size statement. So first of all, it's a financial tool used to analyze financial statement of a company. So here this financial tool is used to study the key changes and trends of financial position and operational efficiency of a business. So it's also called as vertical analysis. So vertical analysis, or you can also call it as common size statement. In common size statement, we prepare statement of profit and loss as well as balance sheet, and here under this technique or under this tool, each financial information recorded in statement of profit and loss and balance sheet is converted into percentage by having a common base. So we are keeping a base, and based on that we are converting each and every financial information recorded in these two statements. So now what is the base? For statement of profit and loss, we keep net revenue from operation as a base. So net revenue from operations is a base for statement of profit and loss. So based on this base, we convert each financial information into percentage. Similarly, balance sheet, when you are preparing balance sheet, we take total assets, or you can also take total liability as a base, and based on this we convert each and every information, financial information recorded under balance sheet into percentage. Then we are comparing a company's performance. So basically here also we take two accounting periods information, that is present year and the last year. So based on those information we are comparing a company's performance by adopting common size statement. So it is a tool to analyze a financial statement of a company. This technique is used for inter-firm comparison as well as inter-firm comparison, but only one important point is, in order to have an inter-firm comparison or intra-firm comparison, same accounting principle must be followed while preparing financial statement. So then only we can adopt common size statement and we can compare inter-firm as well as intra-firm. So let us start with the sum. First we will prepare statement of profit and loss, and we will learn how to convert each financial information into percentage and how to compare the performance, and later on we will study how to prepare balance sheet under common size statement and how to analyze the performance. So let us start from statement of profit and loss. So first let us discuss and understand a sum. So please check your description box for question. Here, from the following information, prepare common size statement of profit and loss for the year ending 31st March 2016 and 31st March 2017. So 2016 and 2017's financial information is given. Here 2017 is present year and 2016 a previous year. So you can also see particulars and two amount column which represents previous year's information and present year's information. In particulars, they have given revenue from operations 5 lakhs and 4 lakhs, other income 20,000, 10,000, cost of material consumed 3 lakh and 2 lakh, employee benefit expenses 60,000, 40,000, financial cost 10,000 and 15,000, depreciation 20,000 and 25,000, other expenses 40,000 and 30,000, and finally they have mentioned a tax rate. Both the year we are charging 40% tax. So first we need to categorize this information into revenue and expenses. So which are the revenue and which are the expenses, because your profit and loss broadly classified into revenue and expenses. So revenue from operation and other income is a revenue for the business. Cost of material consumed, employee benefit expenses, Financial cost, depreciation and other expenses are treated as expenses. And finally, we will have to prepare profit before tax and then finally charge the tax, and at the end you will get profit after tax. So, let us start. So, this is your format, common size statement of profit and loss for the year ended. So, we have to mention both the year 2016 previous year, 2017 present year. Then you have a particulars column to record all the revenues and expenses, followed by absolute amounts, previous year amount and present year amount. All the financial information we have to record in these two columns in terms of amount. Then based on net revenue from operations, we are converting each financial information recorded in these two columns into percentage. So, 31st-3/2016, that is your previous year information converted into percentage here, and 2017 information converted into percentage in this column. So, let us start. First one, revenue, record all the revenue first. Revenue from operations, this amount is given 5 lakhs and 4 lakhs. So, revenue from operation 2016 5 lakhs, 2017 4 lakhs. So, our base is revenue from operation. So, this amount is considered as a base. So, base always 100%. So, it is 100% because this is our base to convert each financial information into percentage. So, what is our base? Revenue from operations. Then we will record the next one, other income. So, add other income. (2016) 20,000, 2017 10,000. Now, we will convert this information or this amount into percentage by this base. So, for 2016 5 lakh is a base because 5 lakh is revenue from operation for 2016, and for 2017 4 lakh is a base because in 2017 revenue from operation is 4 lakhs. So, please use your calculator. So, 20,000, this amount we have to convert into percentage now. So, it is 20,000 divided by 5 lakhs into 100. So, you have to multiply with 100 in order to convert an amount into percentage. So, again I will repeat, it is 20,000 divided by base, that is 5 lakhs into 100. So, 4%. Similarly, for 2017, other income is 10,000 and base for 2017 is 4 lakhs. Okay, not 5 lakhs, 2017's base is 4 lakhs. So, convert this 10,000 into percentage, that is 10,000 divided by base into 100. 10,000 divided by base, that is 4 lakhs into 100. So, it is 2.5. For entire 2016's column 5 lakhs is a base, and for entire 2017 4 lakh is the base. So, after recording revenue from operation and other income, we can total it and find out the total revenue. You can also name it as A, first total, total it 5,20,000, here it is 4,10,000, and you can also total your percentage column. It is 104% and this is 102.5. 5%. After total revenue, list out all the expenses. So, from cost of material consumed, from there till other expenses. So, list out all the expenses. So, first expense is cost of material consumed. First 3 lakhs and 2 lakhs. Cost of revenue from operation in 2016 it is 3 lakhs, 2017 2 lakhs. So, same method we have to follow. 3 lakhs we have to convert into percentage by a common base, that is 5 lakhs, and here 2 lakhs you have to convert into percentage with the common base 4 lakhs. So, it is 3 lakhs divided by 5 lakhs into 100. So, 60%, and the next one is 2 lakh divided by common base 4 lakhs into 100, 50%. Then the second one, the second expenses, employee benefit expenses. Employee benefit expenses 60,000 and 40,000. Similarly, convert this into percentage, that is 60,000 divided by 5 lakhs into 100. So, 12%, and another one is 40,000 divided by 2017's base 4 lakhs into 100. So, 10%. So, 12% and 10%. The third expenses, finance cost, $10,000 and $15,000. Convert into percentage, 10,000 divided by 5 lakhs into 100. So, 2%. Similarly, 15,000 divided by 4 lakhs into 100, 3.75. 3.75. So, you can also analyze the performance. Finance cost, last year it was 10,000, that means 2%, and this year it is increased to 3.75%. Or if you consider employee benefit expenses, expenses of the business. So, last year it was 12% and this year it is reduced to 10%. The next expense will continue, depreciation. First year 20,000, next 25,000. So, convert this amount into percentage. For first column 5 lakhs is a base. So, 20,000 divided by 5 lakhs into 100, that is 4%, and next 25,000 and base is 4 lakh, 25,000 into 4 lakh into 100, 6.25. 6.25. So, depreciation last year it was 4% and this year it is increased to 6.25%. And the last expense, other expense, other expenses 40,000 and 30,000. So, first we will convert 40,000. 40,000 divided by 5 lakhs into 100, 8 percentage. Then next amount is 30,000 divided by 4 lakhs into 100, that is 7.5 percentage. And I have already mentioned base here, net revenue from operations. So, you will not be having any confusion. So, after writing all the expenses, total expenses, total all the expenses, total expenses, you can also name it as B. So, total revenue is A and total expenses is B. So, from cost of material consumed till other expenses, total it. So, first column total you get 4,30,000 and the second column 3,10,000 and total percentage column also. So, you get 86 percentage first column and the next column 77.5 percentage. So, total only expenses from cost of material consumed to other expenses, you will get 4,30,000 and 3,10,000, even total your percentage column. So, after finding out total expenses, the next one we have to find out profit before tax, that is from total revenue minus total expenses. So, total revenue minus total expenses. So, total revenue was 5,20,000 and second column 4,10,000. So, minus it, you get 90,000 in the first column and 1 lakh in the second column and percentage 18 percentage and the second column is 25 percentage. Then apply tax at 40 percentage. At 40 percentage. So, profit before tax on this calculate 40 percentage and for 1 lakh 40 percentage. So, this is the profit before paying tax. So, 90,000 into 40 percentage, that is 36,000. Tax paid is 36,000. The next year profit is 1 lakh before paying tax. On that 40% if you do, the tax is 40,000. On the total also you can do the same, or again you can take this amount divided by the base. Either you can do that or total, on the total percentage you can charge tax. For example, on 18 percentage, if you charge 40% tax, it is 7.2. Similarly, on 25 percentage, if you charge 40%, it is 10. Either you can do in this way, otherwise you can take 36,000 divided by base 5 lakhs into 100. You get the same answer, 7.2. Finally, find out profit after tax. Profit after tax, that is profit before tax minus tax. So, before tax 90,000 minus 36,000, 90,000 minus 36,000, 54,000, then 1 lakh minus 40,000, 60,000. Here also you can do 18 minus 7.2, 10.8 percentage, and here it is 15 percentage. So, this is your final answer. So, you can compare the performance of a company, profit, specifically profit of 2016 and 17. So, in 2016 it was 10.8 percentage and this year it is 15 percentage. The profit of the business increased. Then here profit before tax. So, earlier it was 18 percentage and this year it is 25 percentage. So, in this way you can compare companies, financial position, the performance, profitability as well as the efficiency of the business. So, after common size statement of profit and loss, let us work out common size balance sheet. So, as you know, balance sheet represents financial position of a company which contains liabilities and assets. So, liabilities broadly classified into 3 categories. First, it starts from shareholders fund, then non-current liability, then finally current liability. Similarly, assets classified into 2 broad categories, non-current assets and current assets. So, please check your description box for question. So, here I will read a question and we will try to understand what are the information given and how to classify it. From the following balance sheet of Rajesh Export Limited as on 31st/3/2016 and 31st/3/2017, prepare common size balance sheet. So, here 2016 and 2017 is given. So, 16 previous year, 17 current year. So, on the liabilities side you have equity share capital, reserves and surplus, debentures and current liabilities. On the asset side, buildings, machinery, goodwill and current assets. So, first we need to classify these into different sections of liabilities as well as assets. If you see equity share capital, it is a part of shareholders fund. So, it is recorded under shareholders fund. Reserves and surplus also a part of shareholders fund. So, both equity share capital and reserves and surplus are recorded under shareholders fund. That is the first category under liabilities. Then you have debentures. So, debentures usually termed as long term loans. So, it is non-current liabilities. So, it is recorded under non-current liabilities. Under that you can write under long term borrowings because it is usually borrowed for long period of time. Then you have current liabilities. So, current liabilities are recorded under current liabilities. Then on the asset side you have buildings. So, buildings recorded under non-current assets, under that fixed assets. So, buildings, machinery, these are fixed assets. But again under fixed asset there are 2 types, tangible assets and intangible assets, which we can see and touch, that is tangible asset, which cannot be seen and touched, that is intangible assets. So, buildings and machinery is tangible assets and then you have goodwill. So, goodwill is usually treated as intangible assets. Then you have current assets, that is recorded under current assets. So, you should be more careful when you classify liabilities into different sections and assets into different sections. So, we will start. So, this is your common size balance sheet format. Similar to profit and loss, you have particulars, absolute amount column to record previous year's financial information and current year's financial information. Then you have percentage column in order to convert each information into percentage. So, 2016 information you have to write here and 2017's information here. And again I have mentioned the base for converting each information into percentage. Here it is total assets, or you can also take total liabilities because assets are equal to liabilities. So, you can take either total assets or total liabilities. For 2016, total assets of that year is the base, and for 2017, total assets of 2017 is the base. So, first we will start with the liabilities, and again liabilities broadly classified into 3: shareholders fund, non-current liabilities and current liabilities. So, equity and liabilities. Under this, first one, shareholders fund. shareholders fund. So, your equity share capital and reserves and surplus recorded under shareholders fund because it is a part of shareholders fund. Equity share capital 2016 5 lakhs and 2017 6 lakhs. Right now we cannot convert into percentage because we do not know what is our total assets for 2016 and 2017. So, either you can calculate total liability first, then we can convert, otherwise we have to work out till we get total assets, then we can start converting. So, first we can start filling these two columns first, since we do not know total assets. The second one, reserves and surplus 2016 3 lakhs and 17 3 lakh 50,000. So, shareholders fund is over, under that we recorded equity share capital and reserves and surplus. Next we have debentures. So, debenture is non-current liabilities. Second heading, that is I can write it as a B, non-current liabilities. Under non-current liabilities, I can write it under long-term borrowings. Debentures are meant for long term, so I can write it under long term borrowings 4 lakhs and 3 lakhs. The last one is current liabilities. So, our third heading is current liabilities. So, current liabilities of the business 2,50,000 and 3,25,000. So, we recorded all the liabilities under shareholders fund, non-current liabilities and current liabilities. Now, total your liabilities. Now, total 2016 column and 2017 column, that is we are totaling total liabilities. So, total 5 lakhs plus 3 lakhs plus 4 lakhs and 2 lakhs. So, please use your calculator. So, 14 lakhs 50,000 15 lakh 75,000. So, you got total liabilities. So, total liability can also be base, because total asset is always equal to total liabilities. So, you can consider this as a base in order to convert each amount into percentage. So, 14 lakh 50,000 and 15 lakh 75,000 is the base. For 2016, 14 lakh 50,000 is the base, and for 2017 15 lakh 75,000 is the base. So, we can start converting. So, first take 2016's value. So, 5 lakhs divided by 14 lakhs 50,000 into 100. 5 lakhs divided by 14 lakh 50,000 into 100. So, your answer is, so this is 2016's column. So, make sure that you do not write in a wrong column. 34.48. So, you require 2 digits after the main answer. So, 13.48. Next 3 lakhs. So, first we will complete 2016 column, then we will do 2017. So, next amount here 3 lakhs. So, again base is the same. So, 3 lakh divided by 14 lakhs 50,000 into 100. 3 lakhs divided by 14 lakh 50,000 into 100. So, 20.69. 20.69. The next one is 4 lakhs. 4 lakh divided by 14 lakh 50,000 into 100. So, 27.59. 27.59. The last one 2 lakh 50,000 divided by 14 lakh 50,000 into 100. So, here it is 17.24. 17.24. So, 14 lakh 50,000. So, I said this is the base. So, base is always 100%. Similarly, convert 2017's information with the base. So, first amount is 6 lakh divided by 15 lakh 75,000. So, this is the base total liability of 2017. 6 lakh divided by 15 lakh 75,000 into 100. 38.10. 38.10. The next one is 3 lakh 50,000. 3 lakh 50,000 again divided by 15 lakh 75,000 into 100. So, that is 22.22. The next one is 3 lakhs divided by 15 lakh 75,000 into 100. 19.05, and the last one 3 lakh 25,000 divided by 15 lakh 75,000 into 100. 20.63. 20.63, and the last one is your total 15 lakh 75,000. So, that is your base. So, base percentage is always 100. So, you can check the performance. Share capital, equity share capital, last year 5 lakhs, this year 6 lakhs. In terms of percentage, 34.48 last year, and this year it is increased to 38.10. Similarly, the long term borrowings last year 4 lakhs and this year it is 3 lakhs. So, the percentage is definitely less. The current liabilities of the business also last year 17.24% and this year it is increased to 20.63%. Next is asset. So, on the asset side you have buildings, machinery, goodwill and current assets. So, assets broadly classified into non-current assets and current assets. So, buildings, machinery, goodwill are non-current assets, and finally, you have current assets. Under non-current assets, building, machinery and goodwill are treated as fixed assets. Under fixed, tangible and intangible. First one, fixed assets. So, building and machinery, fixed assets. Under fixed asset, two categories: tangible assets and intangible assets. So, building and machinery, tangible assets. Buildings 3 lakhs and 4 lakhs. So, first we will write all the assets, then we will convert into percentage. The next one is machinery, 2,50,000 and 3 lakhs. Next you have goodwill. So, goodwill is intangible assets. Two lakhs and 2,50,000. So, under non-current assets, we had fixed asset, under fixed we had tangible and intangible assets. Then finally, current assets. Second one is current assets. First year 7 lakhs and the next year 6,25,000. So, we recorded all the assets, finally total assets. So, assets should be equal to liabilities. So, total one by one. First total 2016 column. So, it is 14,50,000. $15,75,000. If you check your total assets and total liability, it is the same. So, total liabilities also first column 14,50,000 and second column you got 15,75,000. So, total asset is the base. By keeping this amount as a base, now start converting all the amount into percentage. So, we will start with the 2016 column, then we will move on to 2017 column. So, in 2016 you have 3 lakhs. So, base is 14,50,000 into 100. So, answer is 20.69 percentage. The next one is 2,50,000 divided by 14,50,000 into 100. Answer is 17.24. 17.24. The next one is 2 lakhs. 2 lakhs divided by 14,50,000 into 100. 13.79. 13.79 percentage. And the last one is 7 lakh divided by 14,50,000 into 100. That is 48.28. 48.28. Then finally 14,50,000, that is the base amount, it is 100. You can also add and check your percentage. So, you will get 100. Next we will move on to 2017 column. For 2017, 15,75,000 is the base, that is the total asset. So, 4 lakhs divided it by 15,75,000 into 100. So, similarly do the rest conversion. 4 lakh divided by 15,75,000 into 100, that is 25.40. The next one is 3 lakh. 3 lakh divided by 15,75,000 into 100. 19.05. 19.05. The next one is 2,50,000 divided by 15,75,000 into 100. That is 15.87. And the last one 6,25,000 divided by 15,75,000 75,000 into 100, that is 39.68. And finally, 15,75,000, that is the base. Base is always treated as 100%. So, you can also check total percentage column. 24, 13.79 plus 48.28. So, it is 100%. So, you can analyze this building last year 3 lakhs and this year 4 lakhs. So, the percentage wise it is 20.69 and this year it is 25.40. So, you had a building of 3 lakhs last year, this year you have purchased additional building. So, the building value is 4 lakhs, or maybe another assumption, building value increased from 3 lakhs to 4 lakhs. So, I hope you understood how to analyze financial statement by using common size technique.